Jerome Powell blinked and the bond market breathed a sigh of relief. Mortgage rates kicked off this Friday down 6.27, which are down from last week's 6.38, making the lowest levels we've seen in over a month. The Fed's softer tone is all it took to steady yields and entice buyers with a little more breathing room heading into next week's CPI. And you may be asking, Eric, CPI next week? We're still in the government shutdown. More to come on that in a second. So let's digest and recap the turn of events this weekend and ultimately what drove the market and something we can be focused on to ensure our buyers and sellers are taking advantage of these windows. So as I mentioned, Jerome Powell spoke earlier this week, which is why we saw rates, really in the first time since the shutdown, pivot. And it was really a shift in tone. As I've been mentioning before, yes, inflation is important, but now Jerome Powell was very direct in saying, hey, we are now very, very in tune to what's happening with the labor market. And in turn, it could warrant and should warrant, an adjustment to monetary policy. Market interpreted that as, hey, 2 additional rate cuts, as they mentioned earlier this month, they being the Fed, are now looks to be locked and confirmed heading into that October 29th decision. Another key thing that stood out was around liquidity and this concept around reverse repo markets, which is essentially liquidity for banks. At one point, that institution was flush with $2.5 trillion in cash. Well, now it's near zero. And that is on the back of this concept called quantitative tightening Jerome Powell mentioned, and it looks like we should be shifting based on those comments and the market interpretation to quantitative easing, which will again infuse additional cash into the system, bring rates down. Now, next week, we will see CPI on Friday the 24th. And again, as I mentioned on the onset, hey, we're in the middle of an active government shutdown, non-essential agency BLS. How are we going to see a CPI report? Well, CPI, or BLS, I should say, earlier this week said that they are bringing back key employees to ensure CPI will be released as expected on the 24th, which is setting the stage right before the Fed meets on the 29th. So very interesting, something we'll be watching very closely. So stay tuned, come back next week as we'll give some insight heading into the all-important October 29th Fed decision. So key takeaways for this week, what we can be selling or saying to our clients, buyers, and sellers. Rates are holding near 627, which again is the lowest we've seen through this most recent cycle. A clear opportunity to take advantage of purchase or a refinance. The Fed's tone undoubtedly has shifted. It was very clear and apparent based on Powell's comments this week. They are now hyper-focused on the labor market, and liquidity pressures are all up in arms with the Fed, which again, with CPI coming next week, this could be the first kind of iteration of a new era for where we see rates going. This may very well be, yet again, the calming before the storm with CPI next week. If you've been waiting, now is your time to take action, as tomorrow's not promised, and we don't know what the outcome will be with CPI. There's definitely some concerns around inflation and what potential impact that will bring to Fed comments later this month. If you find this information beneficial, please subscribe to the channel, subscribe to the newsletter. No, we are always here to support. Please like, subscribe, comment, whatever you feel compelled to do. As always, let's make it a fantastic Friday and an even greater weekend. Thank you.